Today we're going to look at Apple and why they seem to be lagging pretty much every other mega cap stock. And then we're going to focus on FX for the Trading Takeout, because I'm going to explain to you when is a bad time to trade FX and when is a good time. And right now is a bad time. Make sure you like this video and subscribe to ensure I pop up in your YouTube feed every day, giving you the best market commentary and tips so that you can improve your trading edge. Apple, what is going on? It's not the best. It's not looking the best for Apple right now. I think, the problem with Tim Cook, well, it's not really a problem. Is it a problem? I'm not sure. But one of the things that I've noted with Tim Cook is that it's just really not that innovative anymore in terms of what Apple have been capable of previously was building like a cult around some core products. And the most recent thing that they've launched is the Vision Pro. That's not really kind of a mass appeal product. It's quite expensive and it's more novelty. Google released some glasses a couple of years ago and they flopped it. Google have flopped at a lot of stuff. But with regards to that, it just doesn't seem like a product that is really going to bolster them in the short to mid-term. I think that's a very, very long-term strategy. And if we take a look at the chart, I think that's, reflecting this sentiment. So one of the key things to note is if we go to the daily here, in blue is the 200 daily moving average. And what can you see? Well, we've had now 1, 2, 3, 4, 5, 6, 7, 8 closes under the 200 daily moving average. Now, if we look at the weekly, let's wait for it to come up. It's loading. There we go. So we can see exactly what's going on here. So we've got the 50 moving average just here, and it's resting there right now. So we're at a really, really key point in my view. We're going to want to see what happens here for what will occur in the short term. We're on Friday now. If this closes below, then I think that Monday we start to see some selling off of Apple, purely because we're going to be looking at, price is already closed below the 200 daily moving average. It tested it to the upside, bang on pretty much. And then what we're also going to be seeing now is, okay, well, they're saying that mid-term price is actually below the average. That's not good for CTAs and momentum algos. Momentum algos are going to view this as, oh, crap. The market wants it to head lower here. And, we're way lower than the short-term moving average as well. And I'm focusing on moving averages purely because I feel like in this market, momentum is king. Now, I don't think Apple's day is done. Of course not. They're huge. But I think in the short term, there's better opportunity cost. They've not really pivoted into AI that much. And, whatever you think of AI, that is the current narrative that is bolstering momentum, that is causing people to get involved in the market. Now, if they were to pivot to AI, and I think Apple are very much capable of it, that could be a really, really key moment. But the other really troubling thing about this market, just looking at it from a technical perspective, is this. That is so bearish, that spinning top. That is terrifyingly bearish, and especially the move afterwards that, went through all of the moving averages. That's really scary. And I think this is when they actually, did they announce the Vision Pro here? I think that's where it was. Market didn't like it. The market didn't even like it before the announcement, pushing into all-time highs again. So in my view, I think it's a troubling time in the short term for Apple bulls. And considering the weight of the S&P, I wouldn't be surprised if next week we start to see a little bit of a dip. Not too much, because I think NVIDIA is doing a lot of heavy lifting. So is AMD now. AMD's up quite heavy. But in terms of, the heavy lifting that Apple had been doing previously is kind of slowing a little bit, just like Tesla had, so we are starting to see a little bit of a slip. Now, I think at the end of the day, yeah, they're going to come back and they're going to do fantastic. But hearing things like cancelling the Apple Car project, I don't like it. I don't like that. I think Apple could have been fantastic at it. And they've wasted a hell of a lot of money on it. Now, Tim Cook is very good at the financials. Okay, Tim Cook has caused some very, very good shareholder growth, right? Look, I mean, he's been there for a good few years now, and it's, they've had stock splits and things like that, so it's not adequately reflecting how high the price has been in the same way, but it also is because the amount of shares that were also refloated. But he's done very, very well in terms of returning money to shareholders. However, on the innovation side, I'm not so sure. So there are basically, in my view, better opportunities right now than Apple out in the market, if we're looking at it from a momentum perspective. And that should be your primary viewpoint. Where is the Momo? How can we get in and make use of it? Have you noticed recently that it's been quite difficult to trade FX? You'll be expecting a move to carry on, that it just kind of doesn't. It moves maybe 10, 15 ticks, and then it just reverses again. And if you've got a tight stop, you just end up getting stopped out. Well, here's the reason. FX volatility is at all-time lows again, pretty much. There's quite a lot to mention on this, but in short, I would not be touching FX, and it's becoming more of a rarity that I actually get involved in FX because the volatility just is not there. As traders, what we want is volatility. If you're looking at FX from a product of, I guess, transactions, you don't really want volatility. Volatility in FX is not good for its actual use case. Okay. However, from a trading perspective, you really want volatility. And what's happened is that as interest rate policy between different economies has normalized again, where you're getting, smaller spreads between one interest rate versus another, it means that the FX rate is also compressing again. So you're not getting those big swings that you did, through, let's say, 2020, where FX volatility was much higher, when, interest rate adjustment and interest rate volatility was all over the place. That is what we look for as traders. We look for volatility. And for some people, dampened volatility works. If you're trading small ranges, maybe if you've got an algo and you're taking, a handful of ticks out of the market, if you have the adequate infrastructure to be able to keep your costs really super low, which probably requires a hell of a lot of capital, hell of a lot of computing power and infrastructure, fine, you don't really care, because all you want to do is get as many orders through as possible, as many as you can get filled. If you're a retail trader, you don't have that luxury. So you need to be looking for wider ranges, maybe staying in a position for longer, so you're not competing with those super smart algos. And this environment just doesn't give you that. So when FX volatility is low and you're seeing tighter ranges, just stop trading FX, stop getting chopped up, because I guarantee you that is one of the top 3 reasons for just bleeding and decaying your account down.